Silver prices look broken, but the real story is hiding underneath. Because while prices crash on screen, physical silver is quietly running out where it matters most.
All right, let's dive into the absolutely wild and, frankly, contradictory world of silver. You've got this frantic selling and just brutal price swings on one side, but then on the other, there's a hidden supply squeeze happening and these crazy predictions of prices going to the moon. Today, we're going to try and make sense of this perfect storm by looking at what's actually happening on the ground, right inside a dealer's shop. To really get a feel for the market, you just need to hear this one line from a dealer. The last month has been absolutely brutal. The volatility is it's intense. We're talking money flying out the door. And look, this isn't just numbers on a screen. This is a super high-stress environment for everyone involved, and it really sets the stage for the big question that's on everybody's mind. So where is all of this headed? I mean, you hear these whispers and these really bold predictions of silver hitting anywhere from $50 to an astronomical $500. That massive range, it just highlights the incredible uncertainty in the market right now. And to really get it, we first have to look at a fundamental disconnect between the paper price and the actual physical metal. Okay, so let's go behind the counter and see what's really going on with the metal itself. Let's just forget the futures market for a second. The story of the physical supply chain, well, it reveals a fascinating and maybe a little concerning new reality for silver. This is where we see the central paradox of the market. Dealers will tell you there is no shortage of scrap silver. I mean, people are constantly bringing in old sterling and 90% silver coins. But at the exact same time, there is a desperate, critical shortage of the specific kind of silver that powers our modern world. And this is the form that really matters for industry. We're talking about massive 1,000-ounce bars of pure triple 9 fine silver. Companies like Tesla and Samsung, they're not buying up old coins. They need these industrial-grade bars to build everything from electric cars to smartphones. And right now, they are incredibly hard to get. So how is industry getting these bars? Well, they're basically creating a whole new supply chain. Big miners, they're skipping the COMEX, that's the main futures market, and they're selling their raw silver directly to international refiners. And these refiners are so backed up, they're taking whatever they can get. I mean, even premium coins like American Silver Eagles, and just melting them all down to forge those 1,000-ounce bars their industrial clients are screaming for. And this really illustrates a major shift in power. With all these big physical players bypassing the Western exchanges, some people are arguing that the true price discovery for physical silver, it's just not happening in New York or London anymore. No, it's happening in places like Shanghai, where actual physical metal is being bought and sold, not just paper contracts. Now let's zoom in from that big industrial scale to the human element, away from the global supply chains. What is motivating everyday people to either sell their precious metals or, hold on for dear life? You essentially have two completely opposing forces at the dealer's counter. On one side, you have people selling because the cost of living is just crushing them. Wages aren't keeping up and they need cash right now. Then on the other side, you have the stackers, the people who see physical silver as a long-term safety net, a real, tangible asset completely outside of the traditional banking system. This quote from a customer, man, it really grounds the economic pressure people are feeling. It's not some abstract concept. It's the reality of watching the dream of buying a home, or even just affording rent, slip away for the next generation. For a lot of people, selling their silver isn't some strategic market play. It's a necessity. And all of this pressure and volatility, it's breeding some deep skepticism. A lot of investors and dealers feel like the system itself is actually working against them. So let's look at some of the specific concerns they're raising about the fairness of the financial markets. The main point for these investors is this profound lack of trust. They look at the banking sector and see it as corrupt. They believe the main regulator, the CFTC, that's the Commodity Futures Trading Commission, has pretty much stopped doing its job. They point to times where banks seem to change margin requirements right in the middle of a price rally to stop it cold, and they see the COMEX as a paper-driven market that's becoming more and more irrelevant to the physical world. This deep-seated distrust leads directly to a core philosophy. If you can't trust the financial system, then the only rational move is to hold a part of your wealth completely outside of it. You need something you can physically hold, something tangible that isn't just a number on a bank's computer screen. So, with all this chaos going on, industrial demand, economic pressure, systemic distrust, how is a long-term investor supposed to navigate all this? Well, Amidst all the noise, a surprisingly simple and consistent piece of advice starts to emerge. This is the key. When you look at a price chart, it's so easy to get fixated on the wild, short-term spikes and crashes. But one dealer suggests that if you just mentally remove those extreme moments, what you're left with is a clear, steady, upward trend line. All that volatility, it's just noise on top of a very consistent long-term pattern. And this right here, this defines the core strategy for managing precious metals. It's all about adopting a long-term perspective. What that means is you're not trying to time the market or panic during a flush. You are investing based on the fundamental, multi-year trend, and if you can, using those dips as buying opportunities. And that's really the core takeaway. Despite all the different opinions on price targets and market manipulation, the one thing that almost everyone in this world agrees on is the value of holding a physical asset for the long haul. It's not a get-rich-quick scheme. It's a long-term safety net. Which leaves us with this final question. When you're faced with a market that's defined by supply squeezes, frantic selling, and completely unpredictable price action, maybe the most powerful tool an investor has isn't some complex algorithm or insider knowledge. Maybe it's just the discipline of patience. What do you think?
So the biggest opportunity isn't in the panic, it's in understanding the disconnect. Subscribe if you want to see what most investors are completely missing.